All right, so welcome to part 2 of the IMR of 6 September 2016. And what we're going to do now is, after having finished the sector analysis in the earlier part, we're going to now look at doing all the individual stocks on the Nifty and continue with our answering the question about, are we looking at a potential bull trap, or are we looking at life highs coming up very soon? So starting in an alphabetical order, we start looking at ACC. Well, you can clearly see that that's been consolidating, and there's really nothing much to say here except that we just have to wait for the consolidation to get over, and then only we'll be able to say whether it's going to break out or break down. By the overall looks of it, however, if you look at the volume picture, looks like it's likely to go up, but we'll just wait and watch on that. So that's a little iffy right now, consolidating. And Ambuja Cement, almost exactly the same picture. Actually, if you're looking at this from a very, very short-term perspective, you could call this a flag here as part of something of a much bigger 5 to 6 week pattern. And if there is a flag here, or there is rather, so some 260 to 275, we're talking about 15 rupees, and oops, it just goes up and breaks out, and it's a new life high, and then maybe 300 is on the way, right? You can see also here that clearly there is high volume buying that is going on. So both ACC and Ambuja clearly sitting at potential breakout levels. Grasim, on the other hand, another major cement player, there's been some big fall from its life high of 5,200 to 4,600, going sideways. Very iffy, wouldn't want to take a call on that at all in the way the chart is looking at this point. I want to look at Ultratech, and that's definitely something that has broken out and actually made a new life high. So very likely you would expect ACC to and Ambuja to do that. You can also see clearly the triple top breakout that Ultratech had. When was this? June of this year. It was at what, 3,200, and now it is 800 rupees, almost 25% higher than where it was. And by all looks of it, looks like heading to higher highs. 4,500, maybe even 5,000 by the year end is something you cannot really rule out. If you look at it on the weekly chart, excellent move after consolidating for such a long period of time. You can see very strong weekly candles, and doesn't look like, by the looks of it at this point, this up move is getting even tired. Definitely of all the picks, Ultratech would be there, and next would be Ambuja, and then ACC in the cement space. Right. Okay, we look at Asian Paints, so that's really done well. There was a very recent interview by the top management of Asian Paints, who usually don't speak a lot, and they're extremely bullish on their business prospects over the next 5 to 10 years. Decor painting, and a lot more Indians investing or spending money on interior decoration, etc. So a lot more to come there from a fundamental perspective probably. And again here, after doing 1, 2, 3, 4, maybe 4 or 5 tops there over 5-6 months, it's gone from 900 to 1200, and I would definitely expect this to go up further. Setup that I particularly like, something like this in this part of the year, where it just consolidated for months, number one. Number two, a lot of long-term moving averages sitting right below that, and then when the breakout happens, it just really shoots up. The only difficulty, of course, is you're not sure when the breakout will happen. Alright, so Asian Paints, if you look at it, 1250, 1500, I think cannot be ruled out on the stock. And from a long-term perspective, maybe it's going to go much higher, right? So that's Asian Paints for us. Then let's look at the auto pack. We start with the Bajaj Auto, and that's again want to just describe the setup before we move on. You had this consolidation for the whole of 2015, almost in a sense a big uh, triangle, right? So there you can put it. Let's change it the color to match the earlier one, and then it moved out, and then it just gone on to perhaps not yet meet the measuring implication. Let's look at that. We're talking about 2700 to about 2700 rupees breakout here. So 3200. Yeah, still some more coming, right? And done that, I would think quite nicely in terms of nice, higher tops, higher bottoms. The indicators have been very supportive. What's maybe a little bit of a surprise, apart from here where the volumes are really good, is didn't go up really with terribly good volumes. Right now, no divergence as such. Still, maybe want to keep an eye on that, right? Okay. So Bajaj looking good. Maybe it's not a great setup. The run up has happened. Not that it cannot go higher. 3000 is going to be a psychological mark that's going to break beyond. So wouldn't say it's a great setup right now. Maybe after a correction down to 2900 to the trend line here, that's when you want to get in as a trader. Okay. Going down the list, looking at other autos, Hero Motors continues to make life high. That's definitely class 3700. And again, once it broke out of this life high, then that's when the real action started from 3200 to 3600. And I would suspect that there's definitely more coming. And yeah, again, volumes are a little, I wouldn't say too great. This big volume sell-off happened, some news probably, or some bulk trade or something, and then it's gone up. Okay. All right, no real comments on that. Look at M&M. Well, that's definitely looking like it wants to break out. We are in a consolidation zone. Like the fact that it's been consolidating for 3 months now after making a new life high, right? So this is good. I mean, I think after what we saw in cement in the auto space, this is what I like best. M&M, the stock of choice, I would think, in terms of its ability to break out. Once 1500 will be the critical level. Once 1500 breaks out, I think it'll just turn around. MACD has turned the corner, gone up, and don't be surprised. It's, 1550, 1600 could happen quite quickly on M&M. So to quickly make notes, M&M, and then cement space, right? So these are the longs that you want to keep an eye on. Right, I'm just going to drag this off to my other screen. Okay, so M&M, good stop loss, I would say below 1420 if you are a positional person, and then just hold on and be patient. 1420 breaks, then you should definitely get out. Could of course take support at 1400, 1380, but then you think it's a question of breaking out and then going to much higher levels. Don't forget that it's actually broken out from 1 to 2 year consolidation, and I think definitely much more ahead coming for it. Okay, looking at Maruti. So Maruti, 5,800 we said was the target. If you remember, we talked about this flag, this pennant type pattern, and still not there. It's gone up again today, Maruti. It's 5250 or something. So yes, more to come on Maruti, and you can expect 5,800 to arrive. Again, going out on really high volumes. Like I already mentioned last week, there's apparently rumors of another vehicle being launched, Ignis. So could be another runaway success, and if that's the case, then even more reason for the stock to rise. So we are definitely entering the festive season, and car sales have improved. About 12% was the last report, and much more to come, I guess, in spite of the horrendous traffic we've seen on the TV screens in the last few weeks because of the rains in almost all the major cities in India, including Bangalore. All right, so M&M looking good, Maruti looking good. Of the two, I would choose M&M. And then we look at Tata Motors, and that's not yet least the life high, but could very much go there. Tata Motors, of course, you have to pay more attention to JLR and all those things. JLR sales have improved, and the devaluation of the pound is a big plus for that company. But of course, when you look at it from a, what do you say, balance sheet perspective, not good when you convert it to rupees. We had this bearish divergence. Now, little tough to say whether. One second. Okay. I wanted to just highlight this also. Okay. Whether this is enough, this fall here is something which just corrected the divergence. Really a little tough to say, but seems to have hit the 50-day moving average, and then just has kept going up. But the weakness of the candles is definitely a bit of a concern. So if you're in Tata Motors, trade with caution, invest with caution. That's it as far as the auto space is concerned. And if we come back to the, let's look at Bharti. So on the day of Geo launch, it just cracked, and then in the IMR I had done just 2 days before, we were talking about Bharti coming down to 280 or something, and last week, that was last Tuesday. What I had somehow completely missed was the Reliance AGM 2 days later on Thursday, and I was saying that this could take few weeks or months to come, but it came down much faster, right? So this is just collapsed, and I don't think that this is the end of it. Definitely no reason to buy. I think 280 more or less, or 290 at least, needs to come. So it's still short on any rise, in my opinion. And there were some newspaper articles today talking about Jio further cutting their prices and their tariffs in order to get their 100 million customers that they want. So that's not ruled out at all. So we'll have to wait and watch on that. So Bharti, still a short. Idea, also more or less the same thing. I had spoken about this probably being a false up move, and that if it breaks this level, then you just go down, and it just fell. We did talk about 80, 85 last week. It came much faster than I expected, of course. The thing is, it's broken through some very important multi-year 2008 support. And if I ask myself where is the next support, then honestly, this is where this support zone is, in that that yellow zone. It came there and it has, turned back up, as you can see. But again, I don't think this is any good time to buy. this is definitely a time to short. Any rise, especially this downtrend line for about 1.5 years, that's going to be the critical point for it, to break out of. And as long as it doesn't do that, then you're still going down. So could still go to maybe 75. Can't rule that out. So last week you can see how week after week for about 4 weeks the volumes have been really bad, and on the downs, or rather really good for shorters on the downside, and I do not think the downfall is yet over. Definitely no question of buying it at all for any reason. While we are at it, we might as well just do RCOM. And RCOM, oh well, this is definitely interesting. It hasn't really fallen, has it? It did fall that day. I mean, fallen as in it did fall, but it hasn't fallen in terms of breaking any important supports so far. So it's basically at its life low. And again, some people saying that, for all practical purposes, RCOM is basically, well, I'm using the word sort of maybe default back-end subsidiary of Geo, and at some point it might just get taken over. Who knows? Not to say its problems or woes are over, but if there is any rapprochement happening between Anil and Mukesh at the back end, well, at least I have not seen any news about it, and seems to be taking some support. I mean, the only reason I'm sticking my neck out on RCOM, I'm not saying buy, is that it's not broken any life lows or any important supports, unlike Bharti and Idea. So whether at some lower level we are going to see some buying happen, and I don't know, for better or worse, and I get cursed for this left, right, and center. I am an RCOM user, not that gives me any loyalty for that stock, but I'm just wondering, get one offer on my on my phone saying, you can now migrate to Reliance Jio, no validation, no documentation required, you are eligible to become an RGO customer, like that. Just go here and pick up your SIM, it's waiting for you ready. Who knows, they just acquire a few million customers, many million customers, just with a flick of a hand like that. And then who knows, this stock will just zoom. So just conspiracy theories, I know that, but hey, you never know. They do seem to come true once in a way. So RCOM, I wouldn't say short it for that reason, but I would say keep a good eye on it. You never know what interesting stuff might happen. And at some point at 46, maybe, I'm very tentative about this, maybe a good buy, right? Because something like an RGO tie-up comes up, the stock could easily jump 10, 15, 20, who knows, 50% and all that, all right? First of all, excellent support from 2012, 2015, 2016. Of course, the 2008 to 2016 support line on Idea broke down. This one hasn't broken down. That's the reason I'm just being a little, I'm not bullish about it, just being cautious about it. And okay, let's look at volume. Right. So I'm looking at PVT OBV here, and what you can see is clearly some decrease, right? So it's been sold off with volume, there's no doubt about that, but that also means accumulation is going on. And I would just like to probably put this line there, and leave it, right? And that would be what, about 57? Yep, 57 rupees. So if 57 it is able to break out, then I think you want to take a look at it. I'm going to put a line there, and I'm going to put a line there. So these are some, I think, very useful levels to keep track of. Right. So somewhere there is definitely in the support zone. You can see that here 47 to 49. If you're a punter, you might want to think about it. Otherwise, just saying. All right. Okay, so that was telecom with the launch of Geo. Put the pigeon or cat amongst the pigeons, as they say. Right, so I'm going to put that on my watch list. RCOM, this is for long term, nothing for trading right now. All right, so let's now look at, oh, I forgot to look at Bosch in the auto space, so I just want to finish that off. So Bosch was, having the symmetrical triangle. Uh, it's corrected, and what it has done is taken support on the 50-day moving average, gone up on high volumes that time, and then again cooled off. I would be a little circumspect about it. I'm wondering whether we're getting a lower top. You're definitely getting a lower top. There's no doubt about that. Right? You've got a lower top, lower bottom, and whether this is where the stock is heading at this point. So from a trading perspective, a little bit of circumspect view. No strong buy or sell, so I would leave it on that. If it comes to around 2200, 2250, might be a good buy. Okay, let's look at BHEL. So looking at capital goods now, Bharat Heavy Electricals Limited. Okay, very precariously and carefully poised, 200-day moving average above, 50 and 100 also just there at support. Could easily perhaps break 130, 132, and if that breaks, then who knows, 120 is I think very quick to come. So I'm going to make a short list of shorts. I was going to say short list, right? So BHEL, why? Because these good resistance is 140, 139 would be excellent resistance, and a stop loss for a short, especially if it breaks 130, 132, 131, then I think 120 is quite likely. Nothing on the indicators to indicate anything, so little iffy. It's it's two ways. You could also argue for going long and put a stop loss below 129. It might spike up to 146, 150. Reason I'm more on the short side is only because I guess I have that bias and that overall thing that market might be a little bit on the bearish side. Okay. What else do we have here? We've got LNT, of course. So LNT, what's very interesting is has taken support on the 200-day moving average and has gone up. So from 1420 it has jumped to 1500. That would have really been a nice trade and went up on good volumes too. MACD is quite supportive. And looking again, would argue it both ways. I would say that you could look at putting a long trade here, a stop loss below 1475, 1470 for those who are low risk averse. Could come back to even 1410, 1420 before it again maybe turns back up. Right now, looking like it more likes to wants to go up rather than go down. 1483, 1475 or something like that would be probably be a good stop loss to think about. So long with a target of around 1550, and then if that breaks, then 15 or 1600 is also possible. So that's going on my long list. LT short list, BHEL actually very iffy, right? And then what else? It's right. We don't really have much else as far as um, capital goods is concerned, right? Okay, in the Nifty anymore. Need to look outside of that for more. All right, so let's now come to the banks. I guess long time coming. Axis Bank, you see that big yellow line. I know you're talking about a divergence now, and that's where it is. Axis Bank is, I think, one of the leading movers today. Right, so, right, where is that? Yeah, up 23 rupees. Right, so up 23 rupees, and we are at 120. So Axis Bank up 4%, up 25 rupees. Okay, so it is at 625. Now that's definitely impressive. It's there. Only thing again is if I go to this, where I make it line, then I'm definitely seeing an uptrend. There's no doubt about that. So I can put that there. Okay. And right, I'll probably settle for that. So good, strong uptrend channel as far as the line chart is concerned. Simple, easy to do, and all that. Now if I go to candlesticks, right, I live with this. Yeah, I'll leave it at that. Only thing is the big shadows, which are definitely a bit of a concern, so you want to keep an eye on that. And what it's coming to basically is its resistance zone, right? And today with a 4% move, it has clearly broken through that resistance zone. There's no doubt about that, and should probably go higher, right? So that's somewhere there. And 860 or 660 is definitely what the stock is targeting right now. Okay. So let's wait and watch 660. After that, I think even without that, I would say that in a sense a triple top breakout has happened, and this stock could easily go much higher than 680 and much more. Wow, okay, didn't notice this big volume in the some massive trade happened last week, some block deal or something, so whatever it is. Okay, so looks like at this point this bearish divergence, just better ignore it, but keep a careful watch out. Right, a triple top breakout possibly has just happened. Okay, then just going alphabetical just to keep it easy. Bank of Baroda. Okay, so that's now breaking out of a resistance zone, I would say, and that's where is that resistance zone? That's probably in this space there, right? Or yeah, you could probably put it there. And the stock is headed to 175, 180, and then even 190, but will probably require quite a considerable amount of patience, and I think you'll find some better opportunities in the banking space. HDFC, so that's made a new life high, and of course it's not a bank, but quite clearly doing something. And this is the reasons why the index is probably going up. So we've seen this lower volume trajectory earlier, but the market is just conspicuous in its strength now. Again, the volumes have picked up. So 1500 is the minimum for HDFC in my opinion right now. No stop losses. HDFC Bank again, this has you know, really developed some strength again. Alright, so it's come to around 1300, 1285, 1300 breaks, then it's going much higher. So from 1180 to 1300, and then 14, 1500. But again, would be little. Yeah, it's a good volumes happening now. The reason you hear some hesitation in my voice is, after they have run up a little bit crazy to buy, this is a good place to have bought sometime April, May this year after the, a good resistance was broken. So it was around 1300 to 1200 there, sorry, 1100 there, 1150, and then 10-20% return. So HDFC Bank all bullish. ICICI Bank. So this one is one big laggard. Now here is the thing about ICICI Bank. So it's come there, and it's going up on volumes. I just somehow can't help feeling that something not very right about this. Okay. So on the one hand, you've got strong support at 250 psychological mark, long term, short term, medium term, all the moving averages, stuck there. Okay. The advantage of looking at more data. So this has come to one level which is at its 2007, 2010, and 2012 support level. Right. So it's really struggling with that and deciding what to do. Right, so that line on top, that's the 2008 high, and it got to technically take that off. Well, it did, and it really came back down strongly. So I'm not sure how strong that is going to be anymore, but I guess if I had to be in a bank, I would choose something else. This one, weekly. So here's my concern. So let me just lay it out. You've got very low volumes here. You've got some volume pickup here, and this could be a sign of good buying. Talking about that, let's look at PV, OBV, PVT. Yeah. So this is the OBV PVT trend. Okay, it's there, but somehow not happy with it. Right. So. So I just lay it out as to why I'm being so diffident about this. It could come down to 250, and then if it breaks about 240, 245, it's going to fall a lot. On the other hand, if it takes hold support of this, it could go up. But my question in my mind is, why did it not rise up here, right? This is what, technically, this would have been the place for it to really, go up and then, maybe come down again and stay within this channel. This not going up is a sign of weakness, and that's not something that we want to really see. So we have to just wait and watch and see how this pans out. All right. So let's leave that. IndusInd Bank. Well, that's another one sitting there with the divergence, but we've seen Axis Bank break out, we've seen HDFC do well, we've seen HDFC Bank do well, and I guess IndusInd Bank is just going to do well too. So again, IndusInd Bank, a really nice time was April, May this year. It was 1,000 rupees, it's 1,200, and there we are now consolidating. And should it break out of 1,200, then 1,250, 1,300 is definitely a distinct possibility, right? Again, volumes have come down a lot. some uptick volume which is there. Let's see if IndusInd did something today. Yes, it's already done something today, 2.74% up. It's at 1225 for all practical purposes. 1230 is its life high. So what does that mean? 1, 2, yeah. So it's broken out, created a new life high, and I would definitely put IndusInd Bank. Right, Axis Bank. Let's see. All on the long list. So 1250, and after 1250, 1300 in steps of 50 to a much higher level. So that's IndusInd Bank, Kotak Bank. Let's look at that. Well, that's again broken out. So it's breaking out of what I have marked as an ascending triangle. Right. So this is now again Kotak Bank was consolidating for almost 2 years. You can see that here, 2015, right? So whole of 2015, all the way from here to here, really no increase in wealth. Now we are into 2016, and it's only somewhere here that it broke out in about June of 2016, and then after that it's gradually inched its way up. So I think 850, 200, 850, 900, 950 is what you are perhaps looking at. So Kotak Bank again on the long side. Okay, and then on our list we've got. Let's look at SBI and we'll look at PNB. If you look at State Bank of India, I would think amongst all the PSU banks, that's the one you want to be going long on. We saw this sort of, you know, down closing of the window here, came down, taking support, wanting to go back up, getting which stock, right? But yeah, I think 260 breaks. This is well poised. Yeah, you can see that this is back to its 2008, like ICICI Bank in a sense, and you've got this 340 level, and it could really go there somewhere in the next maybe 6 months to a year, or who knows, less. We're talking about 100 rupees, talking about 40%. That's quite substantial. It's already gone from about 140 to 250. Well, that's a 80% move, and another 40-50% could easily happen, right? So this is what we want to focus on and see how this goes. All right, so okay, SBI. Yep, looking good. I would say could go long on that, right? Okay. So the new Urjit Jain, right? It's taken over. Raghuram Rajan has left, and he's expected to more or less continue with the policies of the part with the Raghuram Rajan. Let's see. PNB, right? So what's clearly happening in PNB is there is um, correction going on, right? So you've got a massive impulse wave which went from 80 to 130, and in 2 months it's like almost doubled, and now you've got clearly a correction going on, and this correction could last a little bit longer, or we might be at the end of it, and then we could just see one big move up which is going to start, right? So looks like so uh, looks like 135, 145 is perhaps on the cards, and I would definitely want to watch out for that 135 to 140 level, and once that breaks, then we are going to see much higher levels on PNB. So SBI and PNB, I would definitely want to put my money on that at this point. Okay. So that we've done that. We've done SBI. Yes. Oh yes, I forgot Yes Bank. So this was just an amazing mover. It has gone from 900 to 1400. Look at that move. Look at that move. Okay, just amazing, and it just continues to go on and on and on. It is quite. What do I say? Uh, Almost a vertical move, causing dizziness. Question is, do you get in? Do you get out? This is like one of those conundrums in the market. Obviously, one should have gotten in somewhere here at 800, and then even from there you would have made 50%. Right now, do you get in? I personally would actually just rather wait than jump into the market right now. Right. So, I guess I'll just leave this. This is like an extended wave in Elliott parlance, and very tough to say when it'll sort of get over. And I think we'll just wait for it to correct at some point. If you're holding the stock, then yeah, by all means just keep holding it. But if you're getting in, be very circumspect. At some point it's going to correct. At some point, could be 3 months, 6 months, a year later. That's when it's basically, let's put it this way, it's a high risk trade investment right now, and if you are insisting on getting on it, then strictly follow this trend line, and anytime it breaks below this trend line on a closing basis, you just want to make sure you are out of this stock no matter what, right? So you could do that. From that basis, high risk trade, because we don't know how much higher it could go, but we do know that this is the risk that you're taking, and well, honestly not looking healthy at all, right, in terms of risk reward. So okay, so that brings us to the end of banks. So on the banks, we want to reiterate SBI, PNB, HDFC Twins, Axis, Indus are all stocks that you could be looking at. Okay, looking at Z for a long time. So Z, in a sense, has, I've kept saying this, made a virtual life high. Why do I say a virtual life high? Only because the real life high is there of 2000, like a .com stock, all right? And then if you actually discount that, then I would take this into account, which was 2013, and after that for 2 years it's been making a life high. And then the next life high that I virtually look at is this one, and that's broken out, and it just kept going. It tested that there again nicely. So yep, going up, and 500 again, a bit of a runaway stock, so maybe a little late to the party, but I want to follow this trend line, which is getting steeper, as you can see. It usually happens when things get a little too bullish, excessively hot. So there is strength, there is no doubt about it, except that, well, I want to look, you've probably found a bearish divergence there. All right, so that's where it is, and you may want to keep a track on that bearish divergence. So if that pans out, then we could be seeing a correction. That correction should be used to enter that stock, so nothing great in it right now. Okay, so moving from down, let's start looking at the IT companies now. Look at Wipro. Look at Wipro, we've been talking about it breaking 530, it just broke and it's been falling and falling. 450 I think is the least minimum, and we haven't reached there yet, and actually today it's one of the, I think, worst performers. So if I just refresh, and we are looking right down the chain, you will see Wipro and TCS and HCL Tech, three stocks which are like all IT majors in the negative, right? So in a very apparently bullish market where the Nifty is up 80-90 points, we are where are we now? Yeah, pulled off a bit, 8998. We are down on the IT space. So just as expected, right? Weakness continues, and you should use any of this to actually short that. So the measuring implication has not been reached. Any bounce, any bounce in Wipro should be used to short. I would say 450 minimum. Let that break, and then we will review. As you can see, 450 is an important support for multiple years, 2011, 12, 13, etc. And if we really want to stick our necks out, then that's another place to consider way into the future, or let's maybe put it there and leave it. All right, so that's about 375, 380. All right, then let's look at TCS. So TCS also breaking down is the one which hasn't fallen the most, right? So just holding on to its strength for some time. But now the thing with TCS is it's dilly-dallying with its 200-day moving average and hasn't yet broken down decisively below that. But excellent stop loss at 2540, and you can put a stop loss above that and then just go short on TCS 2440, 2420, and probably lower levels of maybe 2300 are in the offing, in my opinion, in the next few if not days, definitely weeks, right? So this is where it is. And yeah, Tech Mahindra, so that's also kept falling now at again the 200-day moving average. Sorry, yeah, that's Tech Mahindra on a daily chart. All right, so it's broken down from the 200, that was a weekly chart earlier, sorry. It's broken down from 500 to 470, trying to make a comeback, but I would say this comeback is very tentative and hesitant. You could easily short this. Stop loss at around 480, 482, and once it breaks 463, 465, we're looking at 450 quite soon, and once 450 breaks, 430 is on its way. But this has definitely fallen a lot. What is very important, I think, for to watch on Tech Mahindra is notice that it's come back to its 2007 levels. It's in that zone, and we could just maybe put that there, right? So how do I okay, all right, so we are in that support zone there, and if that breaks, then more or less you've got this empty chasm, I would say, all the way here, and it could go to 300 it could take 6 months, it could take a year from 470, right? If I just put some perspective, it went from this level of around 740 to this level of 470, so that's about 300 rupees in about 5 months, right? So don't be surprised, it could just I think this is another good one to look at shorting, and on the shorting side it could actually go to 300. So I'm putting this on my list to strong short. Okay, TCS, Wipro, all these could also fall. And what was showing up there? We need to look at HCL Tech. So HCL Tech again, it's come to, you know, that it's unlike Tech Mahindra, HCL Tech's major 2000 again supports are there, right? And we are quite a distance away. But please don't forget that we've already gone from 1000 rupees plus to 700, so that's 30%. And out of that 4-5 months, you know, it's all just consolidated and just broke down, has risen up, is trying to rise up again. But you know, quite honestly, if you look at it from a weekly perspective, um, let's look at the volumes also. It doesn't really look very convincing. There is definitely some volume buying that has happened at these places. 700 is definitely a good support. At the very least, I think I want to be putting 700 as an alert, and actually very good stop loss. I think right 200-day moving average there, 297. More it goes there, better to short. And it could, once it breaks 750, then 700 is definitely a good opportunity, right? So it's CL Tech. I just wish the CNX IT was liquid. It's not. This would really be a good opportunity to short the entire lot, right? Okay. So the entire IT space, what I want to reiterate about the IT space is, if these important supports on any of these stocks break, the only one which has broken decisively is, in my opinion, Wipro, right? You saw what happened once it broke there. It just fell through really fast, and it's not done that. And again, I guess if it breaks this at 450, then 390 cannot be ruled out. But this has not happened for some of the other stocks, including TCS, and especially for, I think, TechM, right? It's sitting at that very crucial juncture, and it could take weeks, months, and you could have a positional short maybe for the rest of the year, and you'd be definitely a happy person, right? If of course it goes down, right? So, yep. Tech Mahindra, HCL Tech. I think both of them have some good stop loss, good risk reward profile that you could look at trading short. Okay, so that's it. And then we've got Reliance. So Reliance broke out of this triangle. Okay, so that was something, and then has just promptly gone back into that triangle. You can also see that happened with high volume. So this is all that geo time announcement, and then so this was the up move before geo, then this was 2 days of geo, and then I think it just fell, right? And this was a geo day, and then Friday everybody decided what's the big deal, Thursday, Friday. Uh, tricky situation. In the very long term, this stock is, like I've been saying, perhaps setting itself up for breakout. That breakout is definitely far from happening at this point. The geo launch and the price wars could make things even more difficult. It is poised at that 1000 rupee mark. Breaks down, 980 is easily possible, goes up 1040 is easily possible. So from, I would only, the way I would look at it is, I would not want to trade Reliance. If anything, I would probably want to maybe be invested in it for a longer term perspective, because it is my belief that at some point when massive move will start, the only challenge is when and how. and when that happens, you want to ideally be in that stock, so you could be there. But I've been saying this for months, I know that, and nothing yet has happened, so you just have to big time on that, I think, right? Or I could be ridiculously wrong on that. All right, time will tell. Okay, so let's come to two remaining things. Quite a few left actually. Looking at metals, Vedanta. So we looked at the metal index and we talked about, possible consolidations. So you can see, I think the same thing happening here. Um, it's come to uh, important resistance level. Some sort of consolidation, price-wise, time-wise, has to happen. Wouldn't want to be short on it right now, but you could consider being long if you wanted, with a trader stop loss below 164 and investor stop loss only below this 50-day moving average around 155, 156. Right? Otherwise, just wait, let the market settle down, let these stocks settle down. Most likely they should, continue to uh, rally up, or you could see them come down all the way to 125 thereabouts and turn around. So still iffy. So I'm not going to stick my neck out on that at this point. Tata Steel, more or less the similar picture. 380 stuck there. 375 has to do, is doing some sort of consolidation. Let it come down to maybe 340, 350, and then we would review. But from a long term, yeah, sure, it could go to 480, 500. At the G20 summit that's going on in China, a lot of talk about oversupply of steel, and the American government and a lot of other countries wanting to put pressure on China to reduce their steel production capacity. There's a huge glut, so we don't know where that is going. But in terms of technicals, this is right now, in a sense, at a pretty good resistance zone. You can see that. Nice, lot of bottoms there. There's a bottom there. There's a bottom there, or rather top there, top there. It's got to break out now. If it breaks out, then clearly, out of 400, 450, 460 are definitely possible, right? So for a long-term investor, yes. For a trader, I think it is definitely wait and watch. Okay, then let's look at NMDC. So 104, 108. Okay, this was a stock at 75 and has done a pretty impressive recovery. If you look at the downtrend lines, broken all of them one by one, right? And then has gone up long way from its life high. Unlikely it is going that. Now, this is interesting. Do we have a potential breakout here? Right, so I'm going to put this on NMDC. Okay, on the long list. And what am I talking about? A bottom here, a bottom there, sort of a cup and handle sort of formation, and okay, right. So what's nice about it? Broken all the long-term moving averages, has gone up here on good volumes. Now it's consolidating. I'd stick my neck out on this one and say 105 below 98 is definitely an exit, right? If it comes to 100, 101, goodbye. Any sideways move and then a breakout above 110 is the place to buy it, and then it will go to 120, 125. So off the metal stocks, patient, 1 quarter, 6 months move, NMDC could go to 125, 130, right? So I'm going to put that up. This is the, all right, interesting. And then is there anything else on this? No. Okay. Let's now come to, so NMDC of all the nifty metal stocks, that's the one I'm taking a position, or not taking, I would think there's a position that's possible. Okay, coming to energy, starting with BPCL. So after a breakout of 480, the stock's gone to 600, and then now is clearly consolidating. Right, could come down to 470 and then move. All right, some high volume selling going on, so you want to be a little careful of that and not be too much of a hurry to get in. So around 410, we'll leave it there, and then okay. All right. So 580, let's wait and watch and see what happens. 580 breaks, then the stock is easily coming to 540. Yeah. So BPCL could be a potential shorting opportunity, right, for the short term, right. We wouldn't short too much. It's broken out of a life high recently, right, and could easily go up much more after that, right. Kane, look at that amazing move on Kane, right. So again, I want to point out something really nice setup. You've got one massive sort of left shoulder, maybe a big head here, a right shoulder, and then just a big move on very good volumes, right. Textbook retrospective, I know, but if you can think about these things, learn from these examples, and the weekly chart, you can see it much better. Left shoulder, head, right shoulder. Let me put this for our records later. That would be your neckline. Okay, so I followed it, and again, if you had been in the IMR regularly, you would have probably caught this, and it's taken you to 200 from about 140, 150 levels, 30% return, not bad at all. And then we are now consolidating 200 rupees psychological level. All right. So let's just wait and watch and see what happens around 200 rupees. It could it's definitely a zone which has seen a lot of drama in the past, right. This will require patience. Some sort of consolidation is going on, but very unlikely that this stock is going to fall down again back to 100. Just a few pointers. 2011, okay, this stock 2011 to 2014 is basically did nothing, right. 280, consolidated, massive rounding top, right. If you want to look at it on a monthly basis, look at that, right. How for 1, 2, 3, 4.5 years did nothing, and then started to break down, and broke down for a whole 1.5 years, and went from 280 to 120, half the price. Took a year and a half, and then from 120 it's gone up. It could correct all the way back to 180, 170, you never know, but I don't think you're going back to 120 right now, at least technically speaking. Things can change, and if you're a long-term investor trader, then this would definitely be worth looking at and considering having from a long-term perspective. From a trader's perspective right now, 200 psychological mark, that is what you want to be a little careful about. However, I am putting it on my watch list. Right, Kane. On the energy side, okay, Coal India, at 340, could come to 320. I'd skip it for now and we'll just wait and watch. One up on low volumes. That long-term moving average is good support. Consolidating has to either break 345 or break 320. Leave it. All right. And then Gale. All right, so that's looking like it wants to break out of 395. Okay, 400 zone, which hasn't done that since 2015, or rather, yeah, this is interesting. This is definitely an important level for this stock. Right. Okay, 400 breaks, then in steps of 10, 20s, 50s, the stock is definitely going higher in my opinion. So 400, 450, 500 end of the year would definitely be possible. So Gas Authority of India Limited goes on my uh, long list. Okay, and then what do we have? Just a second. Okay, so from a very long-term perspective, I would say, GAIL has just been consolidating since about 5-6 years. So from about that 2010, really not done much. Is it breaking out now? No idea, absolutely no clue, but it could be, until it breaks out of 550, we will not know. And looks like, if you look at it from a volume perspective, what I really like is what I see here. Good volume. When it went up again, good volumes. Now looks like it's just waiting and bidding its time to break 400. So we'll just have to wait for that, right? Okay, so Gale, yeah, is on my list. Okay, great. What else? Oh, we missed Hindalco. How did I do that? So metals pack Hindalco has reached 160. Volumes have tapered off. So yes, this will break out of 180 at some point again. For 5-6 years it's been just going sideways, but it's going to definitely break out at some point. There's no doubt about it. It's maybe 2-3 weeks, months of sideways move, and then a further move on that side. So a breakout, if you're looking at for a signal, it has to be only above 160. Till then, no getting into Hindalco at all. Right. Okay. So that's that. We're looking at any other energy stocks. NTPC I'm going to skip. Really nothing much happens. Just goes on and on. Just a drag. ONGC, of course, right? Okay. So this is interesting. ONGC is definitely has a nice pattern. I would say has definitely come out of the downtrend. Is now formed a flag, right? And I would definitely want to think that. All right, so that's your flag on ONGC. Okay, so 220 to 240 waiting to break out, and once it breaks out, then 250, 260, 280 are all definitely possible. Perhaps along with Kane, you should look at ONGC also, right? And especially once it breaks 250, then 10, 20, 30 rupees on the upside very quickly are very, very easily possible, right? So ONGC looks good. And then looking at power grid, whoa, this stock 160 is now at 183, life high broken and just getting higher. Again, would now prefer to wait for some sort of a correction. This was the big massive breakout from 163, right? And then just be patient. It will at some point come to 165, really far away from its 200-day moving average. That's a bit of a concern. 188, 190, 200, it could go there. Okay, could go to 190, 200 before it corrects, but let's wait for that. There's really no hurry to get in right now, so we'll leave it at that point. And yeah, okay, so power grid was definitely good. At this point I would not be in a hurry to get in. Right, that's it. And now we just have the pharma pack left, so let's finish with that. So we've got Sun Pharma. So Pharma was being buffeted with all sorts of issues, and you can see after a massive secular 1 decade run up, this sector is now in some sort of a consolidation. Would not want to look at buying it. 1200 to 800 is what Sun Pharma has happened, and right now stuck with those 200-day long-term moving averages, just sitting there. And no comment on Sun Pharma, long or short. It could come to 750, go up, it'll go to 800 and come down. If anything, you want to maybe do an option straddle short and make some money from the time value, but taking a positional long or short at this point I think would be out of the question. Okay, so Lupin, well, good support at 1500. Is it taking a triple bottom? I wouldn't really say that, but again, you can see after a multi-year up move, it's just sort of come off, and you don't really want to be looking at this from a positional perspective. So for about 2 years going sideways, 1.5, 2 years, from a trader's thing, I think we've got some better picks, so we are not going to spend more time on this. Dr. Reddy's. Okay. So again, same thing, right? So all the pharma stocks have had multi-decade, 2 decade, 1.5 decade, massive run-ups, and now are going sideways, consolidating. Not a ideal situation to be getting into stocks like this. Dr. Reddy's may be making a base, but just like it could just again quickly collapse. Here's a gap here on Dr. Reddy's that you could look at trading, but it's got all these moving averages sitting up there which could provide it quite a bit of resistance, so we'll just wait and watch on that. Okay, so that is Dr. Reddy's, and then I think that's it. We've come to the end of yeah. All right, so I'll probably start doing a comprehensive review of FNO stocks on a regular basis. So look forward to that. This is it for now. So just to reiterate, so my answer to the question that we started out with, are we looking at longs or shorts, and what do we do, or are we looking at reversal patterns, or are we looking at a bull trap? Well, looks like the view has changed in the last 2 weeks. Some really good long positions in the auto space, in the banking space, and in the energy space, and some good shorts which are there in the IT space for sure, right? So this is where it is, and definitely some lot of stuff happening on the mid cap side, which we will review soon, and also look forward to a fundamental review which is being pending for some time. I want to get done with that ASAP, right? Okay, so that brings us to the end of this IMR. I hope we found some good positions and trades for you. Please trade with stop losses, and I look forward to having you again next week. And any and all feedback is most welcome at these contact addresses that we have provided. Thank you for your listening, and I look forward to seeing you on the in a week from now. Bye.